Well, here we are a couple days away from Christmas in the middle of Hanukkah, so happy holidays to all out there. I'm building this quick video to answer a number of the questions I've received, plus the market, as you can see, is kind of dead here. I'm looking at the live trading feed from yoderangles.com. For those of you who've been following my work, really just been trading with these support and resistance elements, which is just a proprietary way for me to put a line on a chart, which tends to turn the market, as you can see here, on a daily level for the ES, or on an intraday level for this chart of the Great British Pound. These lines tend to act as levels of support and resistance, which really streamline my market analysis process. But don't really want to talk about that today. Instead, I'd like to focus on the questions I received from the track record I posted. And this is a real money track record from another person's account. This is the tool I'll end up auditing and using when I start marketing my money management business, which I hope to launch here in the next quarter as we move into 2009. I've always wanted to manage money. It certainly is the most efficient use of my skill set, but I've been waiting for a bear market to do so, waiting for cynicism to rise, because really I want to maintain my independence. The lifestyle I can have as an independent trader has always been one of the primary reasons why I've been interested in maintaining myself in this business. And it's a lot more difficult to talk to the American people about independence. They love brands. People love to hide behind the safety they feel with a brand. And if there's anything that the last year has done, it's destroyed all faith in the brands on Wall Street, which should give an independent like myself a wonderful competitive advantage. Really interesting to see the fallout from this Madoff situation. Now remember, Madoff is a thief. He's a pure fraudster and con man. He took people's money under false pretenses, assuming that the news reports that we're seeing are true. And this is a Ponzi scheme. Classic Ponzi scheme is a pure ripoff. It's a con job. You take money from people. You don't lose their money by making bad investment decisions, as so many hedge funds and other managers have done in this past year. But instead, you steal their money and distribute it to others and mostly to yourself. So it's not like you took investment losses. There never were any investments. The thing that was most interesting to me was this poll that came out from CNNmoney.com, which says that 74% of those surveyed say that Madoff's behavior is common among financial advisors and institutions. And think of what that means. The investment public, those who are busy going around their lives and really ignorant of how and why we who work around the investment world try to make our living and can make our living in what essentially is a random walk environment. They don't understand edge, they don't understand the process, and they think that Wall Street, in quotes, is populated by crooks and thieves. So my goal here is to really communicate to you what real life trading looks like, what a professional real money trading account looks like in terms of this track record, and give you a sense for what it really feels like to be a trader going up and down through the payout payback environment. And that's really what I want you to take a look at. First of all, I find it ironic that no matter how many strategies I've developed, no matter how many times I spend putting together my risk management for a new trading program, it doesn't seem like you can ever get away from Murphy, and that's exactly what happened here. Started out in April, had a nice 54-point gain to begin the track record, and then immediately experienced a losing streak of about a month's duration before things came back online and the profits began to accumulate again. And that really, in a nutshell, shows the difference between the professional and the amateur. The professional knows where edge comes from and has the patience to wait for it to manifest itself, whereas the individual may begin trading a new trading program, and the minute they start to get negative feedback, they take a few losses, they get cranky, they get frustrated, and they leave, giving up what could be a fantastic edge, which could end up being a primary income producer for them over the next couple of years. So that's something to definitely take away from this track record. The other thing I want you to look at as you peruse here is the cyclicality and the accuracy rate. I've always talked about having a high risk-reward, low accuracy rate model in my presentations, either here in the U.S. or overseas. And people always shake their heads and start taking notes, because obviously people want to go into the market and win. What they forget is that most trading programs, if you win in the short term, you lose in the long term. And my goal is to put up big numbers at the end of the year. And the numbers that I have any given week, any given month are really sort of irrelevant to me. So I employ the opposite. I look for trades where I really don't care if I lose or not, because the profit, should I be successful, is so large that it really offsets the frustration I might experience if I take a bunch of losses. And this sequence here in the YM, the Dow, really shows that. Took a couple of big hits here, which were some wonderful opportunities that didn't work out. Then a scratch trade, and then got the big boom move I was waiting for, where I took 55, 86, and 223 points on a series of trades. And that's really what trading feels like. It's very much an 80-20 business. You spend 80% of your time frustrated and waiting, and 20% of your time making money and building your account's equity for that coming year. So patience is huge. Objectivity is huge. Another thing that's interesting to note on a very personal note is that shortly after I began this real money track record, with obviously real world implications, right? I mean, if things hadn't gone well, it wouldn't give me a very good launching pad for my management career. So there's a great deal of transition and emotional energy riding on the success of this year. And just about the same time I started, my mother was diagnosed with a brain tumor and went through an incredible amount of radiation, chemo, and so the majority of these trades taken on this track record were actually taken on my iPhone, either from the radiation waiting room or the chemo ward itself while she received treatment. So if there was ever proof to me that all of the discussion that I've had when I teach in my seminars or in my books about process, this is the proof. I was able to put up numbers like this, obviously, 416 and 229 in terms of the YM and the ES. I was able to put up great numbers and put double-digit gains so far of that fiscal year to date, in spite of literally the worst emotional time of my life. And again, if there was ever a time to lose objectivity, make blundering errors, or have a degradation in profitability, this is it. There are lots of stories out there, both in the written world and also privately from the folks that I know of divorces and parents passing away and illness and things of those nature that really damage people's trading, as it takes their mind away from the markets. But I spent so much time building my risk control model, building my position trading methodology, that I'm able to trade even when things are very difficult for me personally. And I don't lose that objectivity because I built such a structure. Although it's not a system, it's very systemized and systematic because I've already spent a lot of creative time thinking about the process and building it to be robust. And this is the proof that that works. Essentially, if you can trade and put up numbers in this kind of market during that time of personal turmoil, then there is no argument that that's the way you have to trade. So definitely something I want you to take away from that. Process is everything. Obviously, I'm very much in love with my Yoder angles. It's my primary market analysis tool, and we can talk a little bit about that, as well as some ideas I have about position sizing and maintaining account volatility in other videos. But as we run out of time here, I just want to wish everyone the best of the holiday season. Happy to be back. Took some time off after the whole disease process was over. Really been nice to just step away from the markets and focus on trading, not so much talking about them or analyzing them. But I think we're going to have a fantastic period moving forward from a trader's perspective. Lots of opportunity out there. So definitely time to re-engage, and hopefully you'll want to come along for the ride. As always, thanks for listening. My name's Yoder. Good luck and good trading.